All right, good afternoon. We're going to get going with convene the House Working Group on the rising cost of construction materials. Before we begin, I'm going to ask my delegation member from the great city of Athens to bless us. Representative Fry.
Thank you, Mr. Chair. We all bow your heads, please. Dear Lord, we thank you for this day and we thank you for everything that you've provided us. We want to bless this committee to be able to make good decisions so that we can serve the citizens of this state to the best of our abilities. Please bless this nation and this state as we move forward in these troubling times, that we might see grace and mercy and have it to show to each other. In your name we pray. Amen.
All right, as many of you know, we convened over the summer and we're looking into some of these things. And today what we're going to do is there's a handful of people that give us some updates, kind of where things stand right now, but also give a couple more aspects of how these costs have affected the entire industry, some other aspects of it, an opportunity to speak on that. And with that, I'm going to call Mark Woodall forward with the Associated General Contractors of Georgia to give us a quick presentation. We do have probably 4 people that are going to speak today. I don't know that anybody else has signed up. Let us know if anybody else would like to speak. So we're going to give 10-15 minutes to each and try to get us out of here in an hour. All right. It is on.
Thank you, Mr. Chairman. Mark Woodall with Associated General Contractors of Georgia. We are the oldest and largest construction trade association representing the commercial general contractors and commercial related firms. I've had the pleasure of representing the group here in Georgia for 25 years and 10 years prior to that in Florida. Passed out earlier, the AGC Construction Inflation Alert. We have a national economist with our national trade association, and he tracks all this stuff across the country. So just real quickly, I'm going to try and run through this document. There's some really good information. I'd encourage y'all, if you have the time, to read the entire document, but we'll just try and hit the peaks of the waves. So earlier on, I haven't been able to go to your committees, but watched them on Zoom. It was a tremendous amount of talk about lumber cost, where lumber had gone through the ceiling and everything. I'd like you to turn to page 2 and take a look at figure number 1, where we're tracking the increase in the cost of materials and having it compared to the cost that we're charging for delivering the project. So if you look at that first line, which is red line in color, these are the inputs, okay, on the material cost increased by 27.8%. The bottom line, again, is the increase in cost for contracts. We're obviously not keeping track with what we're having to pay for from our material cost. So big concern, obviously, if that continues for a period of time, you're going to see a lot more folks go out of business and everything else because they simply can't operate with a 22% deficit in their work. So be happy to talk about any of these particular things on this figure, but next one I'd like to, next page, if you turn to figure 2, on that page we track 5 different material cost items. And as again, I want you to look at the lumber one. When you had your earlier meetings, it had spiked above 120%, and at least since September has come down quite a bit to the 60% level. But one of our biggest costs now are steel mill products with 111%. The second highest is copper and brass mill shapes, then lumber, plywood, and then aluminum mill shapes, and then just regular building product stuff. So again, the costs are going up higher than the big prices are, again, creating a tough situation for builders and obviously for owners. Some people attempt to get ahead of this by buying the material early, but then you incur the cost of storage, insurance, and all that other stuff. So it's just been a very difficult time for the construction industry. You flip to the next page, we'll talk a little bit about supply chain issues. Don't need to tell you guys about the problems that we've had with our ports and ships being docked in California and Savannah, and not being able to handle that material and stuff coming in. So my own family, my wife and I my wife wanted to redo our master bathroom about 9-10 months ago, and she started tearing out drywall, and I'm like, stop, because we can't get everything we need. We can't get the contractor to do that. So we're going to wait a year or so when this stuff comes back down. It's not a short-term problem. Everyone's trying to navigate it as best they can. We've heard all these price gouging contractors, home builders, general contractors. Most of the folks are taking a loss to do what they're doing. And I signed a contract to provide those services today based on what's here today. And because of all these problems, when I actually get the opportunity to operate, I'm in a major deficit. So, and the facts are the facts. So I'd be happy to talk about that. I would like to tie in one other issue that is impacting delays in our industry. And it is obviously COVID. I think our industry has done as well or better than most. We've been able to continue to operate as an industry, as an essential industry in providing services. I will tell you that the 2 new vaccination mandates are killing us, particularly the OSHA mandate, which is a 100 employee threshold mandate, is more of a testing mandate because at least you can allow people to get tested instead. But the federal mandate that's been placed on this industry, it doesn't apply prospectively, from this point forward. It applies to existing contracts. So our people have signed contracts based on what the rules were when they signed that contract. They made an educated business decision to do that. And now the rules are being changed in the second half of the game. We can't comply. Our subcontractors ain't going to get vaccinated. So it's totally changed the landscape, and we're just in a really tough position. We're very much pro-vaccination, advocating it at every chance, every opportunity we have, but it's a tough deal. We had a guest speaker last night at our event from our national office on this topic, addressing the OSHA standard, which is the 100 employee threshold standard. So folks with over 100 employees either need to be vaccinated or tested weekly. So what a lot of creative contractors were attempting to do is jettison some of their employees to get under the 100 employee threshold. Doesn't work because they're looking at the threshold being November 5th. So if you had 100 folks and you got rid of 10 to get to 90, you're in trouble. If you had 100 folks on November 5th, you're going to be held to the standard. So these are some of the additional complications that we're running into with our industry and getting stuff done and get it done efficiently and cost effectively. But we will get through this as well. Mr. Chairman, I'd be happy to try and answer any questions.
All right, we got a couple of questions. I'm going to start by saying, as Representative Fry pointed out at one point, right after this committee convened for the first time is directly correlated to when lumber started falling. So I just want to commend the members on this panel to
Absolutely
help that out. That's right. Let's hope steel starts tomorrow. 21, Representative Fry.
Thank you, Mr. Chair. No, I really, just to get more specific on the statistics, that was, I think we were appointed May 8th and the lumber started dropping on May 20th. Love it. Look, I got great news. OSHA suspended the enforcement of Biden's vaccine mandate. So hopefully that will affect the industry or the hurdles that you guys are going through right now.
It's suspended, but it's not gone. We have filed suit nationally.
Okay.
Yeah.
So do you think that some of this, obviously all we hear is supply chain. I feel like we found with some industries that there was actually some just price gouging. And I think that's going around everywhere. And I think that, do you feel like that has attributed to some of the steel as well? Do you think steel is following the foreign-owned lumber companies in this state, where we have foreign-owned businesses doing business in this country that don't have our country's first interest at heart? And I feel like they might be causing a lot of the problems. So how much of that steel is United States steel versus foreign steel?
I couldn't answer that question. I'd be happy to try and get it and get back to you. But I mean, they're the old saying, there's opportunity in crisis. And sometimes people take the wrong opportunities during crisis.
I got one. How many members in your organization?
Statewide, it's a moving target, but roughly we have about 160, 170 commercial general contractors, and then another 400 associate members that are specialty suppliers, subcontractors, surety, insurance, all the above folks that impact our industry.
Thank you. Representative Barr.
Thank you. Thanks so much. Being somewhat in this industry on the home building side, the bid price to the increase, do we see after August? What were your members saying last night? How are they doing? I know that's been a struggle in my industry on our side. What's the conversation like? Are they catching up with their bid increases? What does that look like for y'all?
I think it's different across the board, depending where you are, what your market is, everything else. I'll say this for the three gentlemen here that I know are all in the business. You guys are the most creative SOBs in the world to make it work. I mean, they always have been. You get up early, you work late, you do whatever it takes to get the job done. So we'll weather the storm, but have a lot of challenges right now.
Awesome. Thank you.
Yeah. Representative Wade.
Thank you, Chairman. Thank you. Good seeing you again, Mark. My question is with the national inflationary pressures that we're seeing just in general, it's affecting things like gas. Most of that was not built into all of the current costs that you're talking about because of the supply chain. And when those things hit, do you see any direct correlation with demand slowing down because of uncertainty as it relates to now what we're seeing on the macroeconomic level today?
Absolutely. Just look at the Woodall house and the bathroom renovation. Absolutely.
Yeah. So, I mean, what I'm wondering is, where are we on these two curves? And then are we going to see some creativity where if I'm very curious about the steel, because we had a great opportunity to understand the lumber situation and the dynamics between domestic and foreign players and how that works with the steel industry. And does that mean that we need to be looking at long-term, trying to have more steel here and be less reliant on it from overseas? And as we get through this current kind of crunch, if you will that impact it? And is there an appetite for that as far as from capital investment to bring back steel in a major way in the United States?
Well, different markets have been impacted differently. The home building industry has gone guns during this process, whereas the commercial sector in certain segments like hospitality, restaurants and stuff have crashed. So I think some sectors are doing very, very well. Others are really struggling.
Okay, thank you.
Representative Prince.
Oh, thank you, Chairman. How you doing, Mark?
Doing great.
Hey, listen, I think we all sort of understand this problem. That's why the chairman sort of recommended that we put this committee together. Is there anything from your contractor side of the house, recommendations to us? Because at the end of the day, we're going to try to produce some type of report. I'm not one for just trying to legislate everything, but you guys, I hope you guys are trying to come up with some ideas that we can do as legislators, even if it's temporary fixes, or when I say fixes, but clogs or something to come up to sort of put something in legislation that if we can do that.
Well, and I appreciate that. We're part of a national organization, every state in the country. So that's a great offer. And
again, it's not just your industry, but the transportation. And we talk about truck weights. We're going to talk about some of the secondary suppliers, but I think, and Chairman, correct me if I'm wrong, we're looking for some type of ideas that we can put our heads together, and with your help, of course, to try to put some type of recommendation to our fellow legislators to say, hey, and maybe in times of crisis, and however we define that, we define it, but this is some of the steps we probably need to take. So
We
we
can
look forward
certainly
to it.
ask the question, Representative Prince. I would hope that this truly is a temporary situation and won't be indefinite. And I think what we don't want to do as an industry is do something that's to address the current really bad situation that hopefully is not going to be there after a period of time when things level out. But we're part of a national organization, all 50 states represented. We certainly can ask the question what some of the states might have done, have suggested to be done to help improve the process.
Yeah, we don't want it to be COVID-20 just on this side of the house.
Yes, sir.
Yeah, I'll just, Representative Prince, couldn't agree more. And that's an offer to all industries, like he said. We have come together, looking at this on a wide scale of things, trying to see if there is, if there are things that we can do to alleviate some of the pressures here. We have a housing crunch across the board to begin before this started. This has certainly made it even harder, especially to get into any sort of obtainable housing for folks starting out families and what have you. I know in our area, it is very challenging for anybody to move to the area that's not already well on into their careers in life. So we are all ears and we are here to help. So we have one more question and then we're going to move on. Representative Washburn.
Thank you, Mr. Chairman. Good to see you, Mark. And thank you for the good work y'all are doing. On the supply chain thing, we continue to hear, not just from y'all, but across all industries, about the truck driver shortage. Is there any organized effort for us to begin to address that issue, to get more truck drivers? And I know we talk about some of the problems, but is there any effort by different industries to come together to really address that and to start trying to be proactive to produce some sort of legislation to make it easier to become a truck driver, et cetera? I know there are a lot of safety issues and other things involved, but we continue to hear that everywhere. Do you know of any efforts to really think about addressing the problems?
I don't. I think it's a uniform problem, again, across the country. Obviously, pay is better pay, and I think a lot of folks are doing that to encourage folks, but the need definitely is outstripping the current pool of providers.
All right, we're going to have a little bit of commentary on that subject real quick, and then we'll move on. Representative Barr.
Yes, I think that is, of all of our meetings, I think every organization mentioned, transportation and lack of truck drivers. And some of the things that we've looked at being our technical colleges offering CDLs. I had a great meeting with my local technical college, and they actually suspended their program in 2020 due to the 10% cut that they had to take. So I think that is one area where each individual member can get involved and look at how we can help our technical colleges get those back online. And something that hopefully we can address in our final report is, encouraging our technical schools to start offering that CDL program. It is an expensive program, and that's quite frankly why it was on, the top of the shelf to be cut. They have, the maintenance of those tractors. Those instructors are expensive. So just as an encouragement to each one on the panel, we can dig in locally and help our technical colleges start back those programs, or encourage the commissioner to make sure that's a priority coming up, because it is a economic driver for our state. I think it's super important. Thank you.
All right, Mark, thank you. And certainly if something comes up that you'd like to present to us, an idea, we will be here. But I appreciate you being here today.
Thank you for the opportunity.
We're next going to hear from the Homebuilders. Austin, you'll come and introduce yourself.
Thank you, Mr. Chairman, members of the committee. My name is Austin Hackney, here representing the Homebuilders Association of Georgia. Want to thank you, Chairman Wiedauer, for leading this effort, and especially Speaker Ralston for putting this committee together. This is, we were able to poll our members at our fall conference this year in September, and this is our #1 issue in our industry, in our association, is materials pricing and availability. The Homebuilders Association, as I've told this group before, represents about 3,500 members across the state. This year, we're projected to pull about 45,000 new home building permits across the state. Just for context, in 2005, we pulled 93,000 building permits across the state. In 2011, that number was closer to 13,000 permits pulled. And so at 45,000, you can see we're growing from the bottom of the trough, but still a long way to go to get to that high. Materials pricing, supply chain delays are issues that impact affordability within the housing market. I've got some national numbers to share with you from Dr. Rob Dietz, who's our chief economist at the National Association of Home Builders. Hopefully I won't repeat some of the data that Mark shared with you, but as you remember, in May, lumber was priced at over $1,500 per 1,000 board feet. Typically that had started the year around $300 per 1,000 board feet. So you can see what kind of an increase that is. Our National Association was estimating that increase in lumber specifically was adding $36,000 to the price of a new home on average. So you can see what kind of impact that could have. Based on the work that this committee did, as has been mentioned in May, that number took a sharp decline. Unfortunately, as those products move through the supply chain, it takes months for that decline in the prices to actually get to the lumber yard where our members, can actually purchase that material for a new house. The suppliers are buying it at that high number, and they need to sell it at a high number and get through that inventory before they can start offering it to our members for a lower price. So that number was better in September, but unfortunately has risen again about 40% in the last 6 weeks. And the futures market suggests that we'll see another 50% increase in 2022. So it's not over yet. The Bureau of Labor Statistics has a producer price index, and we use that to see that the goods outside of lumber that are used as inputs for construction year to date have risen 13.2%. So I think one of us asked about, what is it in addition to lumber that's going on out there? 13.5%. It's triple what inflation is doing right now. So you can see that's it's not just other numbers going in there. That's a significant increase. So our members, react in different ways, and this is more polling that we were able to do, not just within our Georgia group, but nationally. And what can a builder do to react to these price increases or delays? And the #1 thing is to delay the start of a project. You heard Mark talk about his personal anecdote, but we've seen across the country 40% increase in projects that have been permitted but haven't started, and that's a new record as a portion of overall permits. So that's a new phenomenon, is just putting off the project that had been, as a business all through the process. It takes a long time to get to that building permit point. And so we've seen even delays after that point. The second thing that we've heard our members talk about, they react with our escalation clauses in their contracts, which is not something that is, I would say, typical in a new home contract, but it has been utilized over the past year more than ever. And that's just what it sounds like, a clause in the contract to let the home buyer know that if something happens to delay the project, or if prices for the inputs go up, then that gives them a heads up on the front end that their purchase price is going to go up too. And that works, to a point. if the customer can afford it. And as part of those escalation clauses, will end that contract. So that's not a good thing. The third way is to just increase the prices to begin with. And we see across the country that homes today are priced 20% higher than they were 1 year ago. So that's a huge increase in a 12-month period. And like I said at the start, that's coming from Dr. Rob Dietz at the National Association of Homebuilders. A couple of the consequences that we see from that kind of extreme price increase in that short period of time are insurance policy gaps. And so a homeowner that is trying to maybe rebuild some damaged part of their house due to a natural disaster or something like that might find that their insurance policy is not going to cover the price of that project. So those kinds of gaps can be a big deal for homeowners. And then appraisals, if you're trying to sell your house as a resale or our members selling a new build, those appraisals might not take into account the fact that they paid that much more for the materials that went into the house. So being able to educate the appraisers or use a different appraisal method has been something that our members have had to react with. So the question came up of what can the General Assembly do to provide some relief? And I think y'all's summer trip to the port in Savannah was prescient, and so anything that can alleviate the bottleneck at the port, our industry would support 100%. Anything that would alleviate, the workforce issues in the transportation logistics industry, I would leave those individual stakeholders to tell you what's the best way to do that. From our perspective, as permit applicants, I would suggest our neighbors in North Carolina took a creative approach that I wanted to share with you. And they did this through not an executive order, but a department memorandum from their Department of Insurance, which does the construction codes in North Carolina. And this has got to do with inspections flexibility. And typically inspections for a new home build follow a specific sequence. So, they want to inspect your footings before you start building up your foundation, and they want to inspect your framing before you start closing it all in. And so, that's spelled out in the building code, but this recent development in North Carolina allows inspections to go out of that usual order. So if your windows, if you've been told by your window supplier that it's going to be 6 to 8 months before your windows come in, you don't actually have to delay the project for that long. You can go ahead and get started. And when it comes time to do your framing inspection or your close in, then you're able to wrap the house or wrap that opening in plastic or whatever it is that can close the house up and allow you to move on to install the HVAC, install the plumbing, or whatever it may be next. So it lets the subs continue the work, lets the project keep moving, and will give some flexibility to the builder to install the windows as soon as they arrive on site, which is something that we've seen a lot of delays in windows and doors specifically. So that kind of flexibility in the inspections, flexibility in the construction codes themselves allow for more alternate compliance methods. Wanted to take an opportunity to thank Commissioner Nunn at the Department of Community Affairs, where our construction codes are administered, and Ted Miltiades, the director of that program, allowed some flexibility on the electrical code at one point earlier this year. And that was due to some nuisance trips on the GFCI units were newly required to be connected to the HVAC system. That was a new thing in the code. And, those GFCI units were almost impossible to find through suppliers. So the department was able to issue a memo and just pull that new provision from the code for now, and let's see where the supply chain ends up on those actual units moving forward. So, DCA typically updates those codes annually and are prepared to react to urgent situations like the one we saw this summer. So, that is an example of a state agency that's doing it right, and we wanted to say we appreciate their work. Representative Washburn asked a question about trucking and transportation. I would say one thing that our members have talked about that are not truckers necessarily, but have commercial automobile insurance policies that have seen the premiums, skyrocket recently, or, especially those on the state line where they can see their neighbors, in Tennessee that have much less to pay for the same policy every year. Anything that we could do to help the industry lower those premiums, whether through tort reform or whatever other vehicle. I think, the less that they would have to pay for insurance policy, that the more that they could pay for their employees to drive those trucks. So those are a couple suggestions that we brought with us, and that concludes my remarks. I'd love to answer any questions.
Awesome. Thank you. I'll start. First of all, obviously, thank you for being here, and thank you for what you guys do for the industry. Obviously, an industry that I've been part of for many years. So I will tell you that I really appreciate you bringing up the flexible inspections. I can tell the committee that is happening in some cases on a local level. We've definitely had some projects where an inspector would allow us to basically house wrap a window and be able to move forward with other things, knowing full well it may be another 8 or 10 weeks before we might get a window in. Typically, they would make you set those windows, insulate it before you could do anything else. So that's, I appreciate that. Also, echo what he said about DCA to expand on that situation just for one moment. So they implemented they released the 2020 code. You have a year. It kind of gives everybody kind of a year warning. Hey, this is going to get implemented next year, and allows manufacturers to start making those items that are going to bring this into code compliant situations like the breakers he's talking about. Well, obviously in 2020, a lot of things shut down. A lot of those breakers weren't being manufactured in a time frame where they could be actually implemented and tested. So even the breakers we were getting, once you actually try to hook them to some of these units, no one was aware that they just didn't have the compatibility. It was an issue across the state. I was dealing with it down along the coast. And then once this committee was formed, I started getting peppered from across the state. Appreciate your efforts in helping with DCA, and certainly Commissioner Nunn understanding the levity of that situation, because people were literally sitting there, they couldn't close on a house because they couldn't comply with that code. So those are great points, and I appreciate you being here. We've got a couple of questions. 24 is that. Representative Campbell.
Thank you so much, Austin. That was very informative, and I appreciate the information that the Home Builders Association provides to us, especially given that we're mostly all involved in the industry in some way. So as a realtor, which is what I do professionally, I've seen home values continue to rise and rise. And I had a conversation this morning over breakfast with a builder, and he said that someone called him and said, I need a house under $250,000. And he mentioned there was an issue because to build a $250,000 house, it would be less than the county ordinance's square footage minimum requirements. So are you seeing local code being a prohibitive factor? I mean, I know living in 1,000 square foot home would be pretty small, obviously, but are you seeing local code also being a prohibiting factor for building basically houses people can afford that are not well into their careers?
Sure. Yeah. Yes. To answer quickly, I think zoning issues have been talked about across the country this year. Affordability has a lot to do with what's the minimum size of the house, minimum lot size of the development. What kind of design standards is that local government requiring of these new houses that maybe the market isn't necessarily requiring. So I think there are lots of regulations out there that add to the cost of a house. And some of them in the building code are necessary, right? We want to make sure those houses have integrity and are safe for people to live in. But not all of them are necessary. And some of those minimum square footage numbers, don't have anything to do with the building safety or integrity. So, having some flexibility to negotiate with local government and from the development side on what some of those priorities are going to be and what the cost of those requirements are to the homeowner, I think would be a valuable conversation to have. And, from the legislative side, anything that we can do to kind of provide more consistency around the state on how those conversations go, I think would be helpful for the homeowners themselves and provide some affordability options around the state. Thank you for the question.
All right, we got one more question, and we're going to unfortunately have to move on. Representative Lim.
Austin, thank you. And thank you to Representative Kemp for asking that question. I'm going to go a little bit in addition to that. Apart from rezoning, zoning, are there ways that we can work with our local governments to bring the costs down of development? And I'm speaking about, so I'm in Gwinnett County. So something I hear particularly from affordable housing developers is the burden of, say, stormwater or pavement costs that are put on them. And those things are obviously, unless I'm missing something, probably not tied to inflation. So are there creative ways, or there's just ways in general that we can help work with our local governments rather to reduce those kinds of costs?
Sure. I think, one of the more obvious ones for me to look at a hard cost that, could be alleviated or through development impact fees, and especially as it relates to affordable housing developments specifically, the state law creating development impact fees allows local governments to waive those fees for affordable housing development. So I think, if that's a priority for a local area to get more housing for the workforce or for the families that need it, waiving those development impact fees is a hard dollars that, wouldn't get passed through to the new homeowner. So that's the first thing that comes to mind. But certainly the, minimum sizes and all those things add to the cost of a new house. Thank you for the question.
Awesome. Thank you for being here. Yep. And
Thank you.
Let us know if there's anything else to come up with.
Appreciate it.
Now I'm going to invite Susan Bucardis to come up to the podium and introduce herself.
I am Susan Bucardis. I'm a commercial lender in Athens. I appreciate the invitation from Marcus. As he knows, I've been involved in lending and construction lending, and Spencer is a friend as well. Affordable housing is close to his heart and mine as well. I served on the Habitat Board for 9 years and still support that organization greatly, of course. But I do appreciate the opportunity. After your last committee meeting, which I did watch, as I explained to Marcus, I'm somewhat of a little politics nerd, so I would be one of those few people that would watch that. It was interesting to me that all of the industries were being discussed and the impact of the material cost increase. But the one segment that was being left out was actually the consumer. And I feel like we need to talk about that. So I said, I work for a community bank. Our bank's been around for almost 100 years. I do all types of lending. I have builders that are customers. I make commercial real estate loans. I make SBA loans. I do commercial real estate construction, but I do a lot of construction loans directly to the consumer. And I really want to talk about those people and how this how this has impacted them. These people are building their personal homes. A lot of times they're dream homes. They've saved for this. They've planned for this. The rising cost of construction materials has impacted these homeowners. They're not building for the short term and then are going to sell it and can recoup the cost or the overages in a few months. This is their savings. A lot of times they've bought their land. A lot of their funds went into the land. That counts as their equity when we look at a loan. So you can't use that. We use that in our calculations anyway for loan to value ratios. Builders are different. I understand. Austin, longtime member of the Homebuilders Association.
have been since the 1990s. We go way back. I mean, I'm all in on the Home Builders Association, and I understand that impact. I have builders that are my customers. There are pains there as well, but that's just a different element here. I have customers that are tapping into their retirement to make up these overage differences. These people didn't plan to do that. I have a woman, and this is true, and she was almost in tears talking to me. Her home is about 80% complete right now. She planned for this house. She bought her land. She paid cash for the land. I mean, she works at the local hospital. You know, overages are expected. Somebody goes to the lighting store, they blow that lighting budget on 3 fixtures. That's not unusual. We account for overages, but this is not that. This is something entirely different. This particular lady has changed her house plan. She has downgraded the materials she's using. She is accepting less of a house. And to listen to her, this is not her dream house anymore, but she's already in it. She's got to finish it. Her overages at this point, her cost to build is $275,000. That's exclusive of the land. That's just her cost to build. Her overages at this point are $52,000. That's real numbers. That's not statistics. So a few other examples. Again, I do all types of loans. I have another one, a $250,000 cost to build. And all of this is just cost. This doesn't include land. $35,000 in overages. The one I just discussed, a $395,000 reno project. I do that, purchase, reno, gut it and start over basically. A lot of that's going on in Athens, as the two of you would know. They remove the appliances and the landscaping from the budget and plan to do that a little bit, buy lesser appliances and do the landscaping themselves to cover some of the overages. $53,000 in overages. A $519,000 ground up construction. It's 50% complete at this point. They're already at $28,000. And then we can go on the upper end as well. A $1.1 million cost to build. It's at Georgia Club. They're 50% complete. They have $47,000 in overages. That's 50% complete. Are they going to have $100,000 in overages? I don't know about y'all. How many people do you know that have between $35,000 and $100,000 excess funds to put into a project? Most don't. When we underwrite a loan, we require reserves. Our requirement typically is going to be 10% of the cost. For years, that has served us well. 10%'s been enough. That's not covering this. That 10% was for those overages, like I talked about, when you blow your lighting budget on a couple of light fixtures. That's where people are starting to tap into their retirement. So how do you recoup that? Okay, somebody says, oh, just increase the loan, get a new appraisal. It's not that simple. It is not that simple. And Austin, I think, mentioned, let's change the appraisal process. Let's look at cost. Well, we're going to need to talk to Fannie Mae, Freddie Mac, HUD, VA, rural development, because they all tell us we have to use market value, not cost. So that's a bigger issue than just, hey, lender, just use that cost. And let me assure you, I've talked to appraisers. They have builders asking them to use the cost. Can't do that. So it's not that simple. I would like to when I have these people come to me, but we can't. So if we get a new appraisal, unfortunately, right now, cost is sometimes exceeding value. This is unheard of. In the past, you could build a house, your cost and your value was going to be higher by building that house. So, we have loan to value restrictions, we have appraisal guideline restrictions. There's a lot to it. The other thing is, let's talk about what this is doing on the starter home market and affordable housing, which I know Spencer's going to perk right up at that. So for example, let's say a teacher starting out makes $40,000 a year as a new teacher with no other debt. They would qualify for approximately $230,000 loan amount. 5% down, that puts your loan at $242,000, your sales price at $242,000. To your point earlier, no one's building a $242,000 house. If they are, let me know, because I've got some borrowers. But so this issue, it's bigger than just one thing. It's not just appraisals. It's not just, it's impacting people across the board. And to the question concerning local policies and square footage restrictions and that type of thing, we've got to get a lot of people around the table to try to solve some of these issues. So that's why I'm here. You know, I want to look at these consumers. I want to talk about these people that are tapping into their retirement, building a home that wasn't necessarily their dream home. I have a 30-year-old son. He just got married. I would like for him one day to be able to build a house. He's gone on inspections with me since he was this big. He could walk into a room, for a framed house, and tell me what room was what. He loves that end of it. He would like to build a house. If this continues, I don't know that he's going to be able to. So that's what I wanted to share today. I appreciate the opportunity, and I'd be glad to answer any questions.
Thank you. We do have two, maybe three, if they're quick. We got Meg Perkle holding for us, and we need to get her on to her next meeting. We'll start with 26. Representative Wade.
Hey there. Thank you so much. I'm a community banker too, 23 years. I know what you've been living. So first, thank you for what you do. And I'll say a lot of what you shared, I am sympathetic to, but I also think that as a banker, there's advisory roles that we have to help clients deal with when there are major economic shifts. I know you probably had the same experience I did in 2008 when it was the exact opposite, where values were just precipitous decline, in my opinion, due to federal policy. But I do think that we need to be very aware of the fact that these folks are facing what they're facing. And I like the idea of having assistance on having a conversation with Freddie Mac and working with our federal partners, engaging the FDIC, some of our regulatory agencies, just around some of the policies that I think are very, very beneficial to the swings. They make it worse when this happens, and figuring out a way to soften those things, I think, is very important. So,
Yes.
But ultimately, I'm having to tell a lot of folks, you need to keep saving and you need to put that off, which is not easy, but it has prevented some of the experiences that some of the folks that you probably are in the middle of. And I can tell you, my wife and I've been, we're waiting. I don't know. She's like, oh, well, is it going to even matter in another year? I just heard 50% more. So we may be waiting a while. But anyway, I appreciate you. I love to hear from a peer banker, and I know it's not easy. I've had those same calls. So God bless you for what you're doing.
Representative Camp.
Thank you so much for being here today. And it's remarkable. We're sitting here discussing this issue now with the cost of materials, the cost to build, the issues that we're having with properties not appraising for the materials that are put in the structure to make it so, because 10 years ago, everything was dependent upon the foreclosure market. And the foreclosure market drove every appraisal. It didn't matter how much you put in a house, resales were impacted so dramatically by the foreclosure market. I would like to explore how we could take some of those sharp edges off, but really in a free market space, the edges, what's driving the market right now is new home construction. And it might be spec new home construction, not custom new home construction. Because I know firsthand, I've yet to had a client who built a house that was under. In 15 years, I've never had anyone be under. I applauded someone one time for being only 3% over. So I certainly get that. Do you see any opportunities or any changes perhaps in lending from what you're seeing? You're saying the 10% that you were requiring a homeowner to put down, or a homeowner on a new construction to put down about 10%. Do you foresee that number going higher from your bank, or has your bank taken steps to make a higher down payment?
And that's not necessarily a down payment. We want to see that in reserve. So
reserve.
that they have that cash on hand. And as this issue has increased, we are looking, depending on the cost to build, for people to have more than 10% now. It's just because of what's going on in the market, these numbers that I presented, 10% is not covering the overages. And a lot of these people started with anticipation that they were going to finish, and they're in the middle of it and had no idea this was going to happen. So to the earlier point of having conversations with people, if they're in the middle of it, you kind of have to finish it. I mean, you can't just stop construction. So, you know, we discuss reserves, we discuss overages, but we are looking very closely at having reserves on hand and having those discussions with people.
All right, one more real quick. Representative Fry.
Thank you, Mr. Chair. Appreciate you humoring me on this question. Susan, I'm so happy to see you here. She's known me since I was little. And by little, I mean like 22. That was a long time ago. I can't believe Chatham got married in his 30. That's bizarre. But listen, so you're talking about these single projects and how they were over on that certain amount. Do you think, and this is also to you, Wade, a little bit, does that put our banks at risk within this time period of having, I mean, if the customer doesn't have that extra cash, how does that project close? And do you just keep it on a construction loan until we hope things are going to get better? Or are y'all keeping track with that catalog of those numbers? You know, I mean, you called out like $300-something thousand right there.
We get creative. I mean, so here's our draw sheet. You know, we're old school. We inspect. If you're building a house and you want to draw, you let me know, and I'm going to come out there and inspect. I'm going to boots on the ground. We disperse on completed funds. We're not getting ahead of ourselves in disbursements. We don't do that. I think a lot of banks learned that lesson in the crash. So we are tracking these overages on that draw sheet and having those discussions with those borrowers as it progresses. And so a lot of times that's when they are saying, I'm going to need to change and I'm not going to finish the landscaping. We're going to not have custom cabinets. We're going to maybe get some prefab cabinets. They're adjusting that budget. So yes, we are trying to reduce that risk. Now, the good thing is a lot of times on the permanent mortgage side of things, Fannie, Freddie, through a mortgage department, they can sometimes through some programs go to a little higher loan to value. So that does allow them to include some of that. But that's not always the case.
Mm-hmm. Thanks. Do you see a slowdown? Can I ask one more question? Do you see a slowdown occurring? Because we all know here that the building industry is what's driving our state's economy and our national economy. And if this thing turns upside down and we're having these increases, I mean, we're going to really see, you know, almost like a massive drawback on all this stuff, which is going to kill us even more. I mean, you've seen it happen at y'all's bank already?
We are still busy with construction, new construction request, construction projects in the works. Our market is Athens, Clayton, Rabun County, Barrow, Oconee, Gwinnett. So we cover a pretty wide area. And I would say across the board, it's still pretty steady.
Okay. Thanks for coming up here.
Yep. Thank y'all very much.
All right. We're going to move to Meg Purple. I think we have her online. We're going to get you going here. Chief Engineer for GDOT. And Meg, I sit on some other committees that you've had the opportunity of presenting in since we've been down here for special session. You guys do a great job. I think specifically, if you'll take some time, and it looks like you got it pulled up here. Yep. Running through the truck weights. I know that's been a topic of conversation here, and just how that affects our roads and the concerns there. And I'll let you roll through that as quickly as you can.
Thank you so much, Chairman Wiedauer. Can you hear me okay?
We can hear you perfectly.
And you can see the slide?
Yes, ma'am.
Great. It's great to be here with you today. And I know that you were trying to finish by 2. So if you, at any time, if you need me to wrap up pretty quickly, just give me the sign.
You're fine.
I will try to go quickly out of respect for y'all's time. And you're welcome to ask me questions later or ask for details, and I can provide them at another time, whatever you guys desire. So first, I'm going to cover Georgia's bridges, our conditions, and the impacts of weight, same with pavements. And I'll talk a little bit about the current axle weight limits for trucks. This is Georgia's bridges. We have over 14,000 structures in the state. And right now, at this point, less than 1% of state-owned bridges are posted or load restricted, and about 28% of locally owned bridges are posted or load restricted. And what that means, if a bridge is posted, it doesn't mean that it's unsafe or likely to collapse. It means that it has maintenance concerns and needs to be replaced or repaired. Just to be clear, if a bridge is unsafe, we will close the bridge and require the local government to close the bridge. We do inspect bridges every 2 years per federal law. These are the current bridge conditions in Georgia. I won't linger here. Y'all can look at that later. And this map shows all of the bridges in the state that have load restrictions for a regular tractor trailer at 80,000 pounds, which is the current gross weight limit in the state of Georgia. So we have 1,450 structures that are posted. The black dots are closed bridges. The yellow dots are posted bridges. And what determines why a bridge is posted? Load ratings are based on the original bridge design, what it was designed to carry, and then it's adjusted for the deterioration of the bridge over time as we do our biannual inspections. So load restrictions posted are based on our legal loads. And just to give perspective, last spring, there was a bill proposed to allow lumber trucks to go up to 100,000 pounds. And so we took a look at what happens to postings if we were to increase the legal load weight limit. And if we were to increase the legal load weight limit to 88,000 pounds, we'd have to post about 7% more bridges. That's 653. If it was 90,000 pounds, it'd be 749 more bridges. And if it's 100,000 pounds, it's 1,464 more bridges, almost 16% of our bridges. So we maintain a rigorous database of our bridges and structures and their conditions, and it's updated every day as we do inspections. So when we do this kind of projection, it's actually based on absolute fact and the current conditions that are on the ground. It's not speculation. And if weights were raised to 100,000 pounds, these would be the bridges we would have to post immediately. So you may ask why, if our bridges are in pretty good condition. And I have to say that as far as compared to the other 50 states, our bridges are in very good condition. But why would so many be posted if the weight limits were raised? And this can be explained by looking at the ages of bridges in Georgia. We've made a lot of investment in our bridges, and we've made a lot of headway since the Transportation Funding Act passed in 2015. But as you can see, we still have a lot of older bridges in Georgia. And for every bridge we replace, there are several more that have reached their design life of 50 years. So, back 40, 50 years ago, we were designing bridges for about a 50-year lifespan. Now, when we replace a bridge, we aim for a 75-year lifespan or more. But the average bridge age in Georgia is 42.6 years. And although we take good care of our bridges in Georgia, good maintenance allows us to maximize the life. When you do maintenance work, it doesn't make the bridge brand new. So you still, eventually, the useful life will be reached and the fatigue will prevail, and you'll have to replace the bridge. So this is showing what design trucks look like. And bridges designed in the 70s and earlier were designed for less stress than the trucks that we have on our roads today. And there are a lot of bridges in Georgia that were designed for the smaller truck shown on the top here. That's known as the H15 truck. That's what we call it. Design trucks are theoretical. They're meant to be representative of a typical truck envelope. And when we design our bridges to resist the forces that are applied by the design trucks, the lighter the truck, the less reinforcement, steel and concrete was needed. And so the bridges that were expected to see more traffic were designed for the heavier truck. Now, when we replace a bridge, we always design for the heavier truck, whether it's a local bridge that we're replacing or a state route bridge. However, local governments may still choose to design for a lighter truck if they think it's a roadway, like an entrance into a neighborhood or something that's not going to see a lot of truck traffic. That is their option. So when it comes to bridges, the number of truck axles is kind of irrelevant because it's more about the gross weight of the vehicle that's sitting on the bridge at a given time, because the impact of the load is like almost like a sledgehammer onto the bridge. And the faster the speed, then the faster that blow is going to be. It's a dynamic force that causes a harder blow. So increasing truck weights is like going from an 8-pound sledgehammer to a 10-pound sledgehammer, and the bridge will be dealt a bigger blow. Congress enacted the federal bridge formula in 1975 to limit the weight to length ratio of a vehicle crossing the bridge for that very reason, because it's what is important is how much total weight is on the bridge at a given time. In the top figure, you can see that the stress on the members of the bridge is less because the weight is spread out longer, whereas the shorter truck has all of the stress in the center of the bridge at one time. So the goal of the federal bridge formula is to ensure that the load is spread out far enough to safely carry the load without damaging the bridge or causing a catastrophic collapse. And this formula applies for all weights and configurations on the state route system for loads between 73,000 and 80,000 pounds. So to meet the bridge formula for an 80,000 pound truck, you'd have to have at least 57 feet between the axles. Short, stout, heavy trucks are the ones that do the most damage on our bridges. So looking at our current inventory of bridges and what they were designed for, if you remember the previous slide where I showed the bigger truck and the smaller truck, you can see the H15 that's circled here. 31% of our locally owned bridges are designed for that smaller truck, and about 11% of our state-owned bridges. And if you go up a couple of lines to where it says unknown, these are bridges that are so old that we don't really know what they were designed for. So if you assume it's probably for something smaller, that's about 50% of locally owned bridges are probably designed for a smaller truck or unknown. And this is important because on our local systems, the larger vehicles can cause a lot of stress on the system. So what does stress do to a bridge? Stress means the deflection of the beams on the bridge. Imagine if you hold a ruler between two fingers and you press down in the middle, it deflects. And that's exactly what happens to the beams on a bridge. And if you were to put a piece of plywood between two sawhorses and stand on it and jump on it, depending on how strong that plywood is, you could maybe jump a bunch of times, or if you're small or big, it might really make a difference how many times you could jump on that plywood. It's the same with bridge beams. So a heavier truck can probably cross a bridge and be fine, but it's how many times that heavy load is going to go across the bridge. It's the fatigue and the many crossings that wear down on the bridge. So if you can see here where the circles are highlighted, those are areas where the deflection exceeds the actual design load of the inventory of bridges that we have in the state. And in the interest of time, I won't go into too much details of explaining this graph, but if anyone would like to call me and talk about it, I'll be happy to walk you through it. So now I'm going to move on to talk about pavements in the state of Georgia. We do a good job of taking care of our pavements. I only have data on state route pavements. We don't collect data on local government pavements like we do for local bridges. So this shows that for the 17,800 centerline miles in the state of Georgia, 52% are in fair condition, 46% in good condition, and then 2% in poor condition. We inspect all of our pavements annually, every mile. We do it automatically with trucks that have LiDAR that collect images, and then we translate those images into condition data based on cracks and rutting and everything else that you see out there on the pavements. But one thing that's important to understand is that our annual inspection just looks at the surface. We can't see what's going on underneath. And when really heavy loads are traveling across pavement, yes, they can cause cracks on top, but they can also cause big damage to the layers in underneath that you can't necessarily see with annual inspections. And so, because 95% of our pavements in Georgia are asphalt, which is what we call flexible pavement, that's what I'll focus on here is the impacts to asphalt. So as you can see, when we design a road, we have a lot of layers there in this design. And when GDOT designs a road, we engineer the pavement for truck weights because state routes are the truck routes, and that's what we should design for. But understand that local governments, a lot of their roads, I'd say most of their roads, are not engineered pavements. It's going to just be more subgrade with a layer of asphalt on top. They may have some gravel in between, but there are a lot of local roads that are not designed to handle truck weights. And so, you know, the impacts of weights to trucks is definitely greater to local roads. So when you're talking about pavements, here we show flexible pavements and rigid pavements. Rigid pavements would be concrete. You can see that you want to design the pavement so that the axle weight, which is the weight on the tire, does not go all the way down to the subgrade. Because once it gets down to the subgrade, that's when the road will really start rutting and falling apart. You want to be able to absorb all that weight and distribute it through the surface and base and sub base. And it's very important to remember that for the roads in Georgia, you know, they were built, you know, over the last 100 years, and some of them have been rebuilt and some have just been, you know, we resurface and resurface and resurface. So it's hard to say, looking across the state, what % of roads could handle certain types of weight and what couldn't, because we just don't have that kind of inventory data like we do for our bridges and structures. It's a very varied landscape of what is out there under the surface of the asphalt. When we design our pavements, we already represent a large part of our pavement design thickness is because we add about 1.5 times more pavement to handle the current legal loads of 80,000 pounds. Increased vehicle loads deteriorate existing pavements faster than accounted for, and they'll require an increase in annual maintenance funds. We typically shoot to resurface our roads about I'd say about every 15 years. Certainly roads with very high traffic, very high truck traffic, it can be every 8 to 10 years. Very rural roads that have very low traffic, it can be every 20 years. But the more fatigue and damage that comes from higher truck weights would certainly increase that cycle of resurfacing the roads. And of course, if they fail from the bottom up, then you have to actually rebuild the road. Resurfacing is not going to solve that problem. There have been a lot of studies done about the impacts of truck weights on pavements. I won't go into a lot of details on these, and neither of these were in Georgia, South Carolina, and Texas, but they all show that the relationship between axle weight and inflicted pavement damage is not a linear one, but it's exponential. For example, a 30,000 pound axle weight does more than 67 times damage of a 10,000 pound axle weight. So it's definitely an exponential relationship and not a linear one. And again, these numbers are for engineered pavements like we use at Georgia DOT, and many county roads are just not engineered for truck weights. So let's talk a little bit about the weight limits in Georgia. Currently, the gross weight limit for a truck in Georgia is 80,000 pounds, but really what it comes down to when you're hauling things is the axle weights that are allowed. And there are also a lot of commodities that are listed here that get additional loads per axle and tandem. And they also, some of them also allow a 5% variance per single axle due to how the trucks are, how the commodities are put onto the truck and how specific you can actually get in measuring the weight of that truck. And just one thing that's not on this slide, but to keep in mind, non-divisible containerized freight originating from or destined to the port can be up to 100,000 pounds. And just keep in mind that because of the size of containers that come from the port, they are kind of self-limiting in how much weight you can actually get in a container. And less than 1% of the containers that come and go from the port actually approach that 100,000 pound weight. And that is federal law. So this shows our axle loading compared to our neighboring states. The special exemptions that we allow for the commodities on the previous slide, as well as the variance for scale, shows that Georgia allows higher axle weights than any of our neighboring states already for all of those other commodities. And scale variance is just to account for vehicles originating from a field or a mill or things, plants or a quarry where they don't have exact measurement. Same with tandem axle loading. Compared to other states, Georgia allows the highest axle weights. So to wrap up, the impacts of truck weights and bridges on pavements is that increased weight limits will accelerate deterioration on pavements and bridges. Increased truck weights will result in additional bridges posted with weight limits, regardless of the number of axles. Increased axle loading will cause exponential damage to pavements, and the greatest impact will be to local roads and bridges. So any increase in legal weight limits gives GDOT great concern due to accelerated deterioration of our greatest asset that we have, which is a very huge investment in roads and bridges in the state of Georgia. And we've made great progress since 2015 in improving on the maintenance of our roads and bridges, and would hate to see that rolled back. But thank you so much for your time. I'm happy to answer any questions now or later if you prefer.
Thank you very much. We had a switch in chair. So I am chairing the committee now. Our previous chair had to run to another meeting. Committee, do we have any questions? I will start with one, just out of curiosity. Do you know when the last time we did increase truck weights?
Gosh, you know what? I have a slide that shows that, but I don't have it right in front of me right now.
That's fine. Is it 40 years? Is it 10 years?
No, it was not that long ago. There were some commodities that were added. I mean, I'd say in the last 10 years or so, but I'll have to, I'll look and I'll send that to Matt Hardy. Is that right?
Okay.
Is that who I should?
David?
David Hartman,
Yes.
sorry.
Mhm.
I'm thinking of
And
someone
for our
else.
committee's benefit, I believe he already sent us the presentation that you have made.
Great.
So I want to see some of the up close, and for reference, he has that in our inbox.
So David, I'll send you that timeline of how things were when they were increased over time.
Perfect. Well, I definitely learned a lot. Thank you very much, committee. No questions? Well, thank you, Ms. Mega. We definitely appreciate your time and the work you put in over there at GDOT for us.
Thank you so much.
Thank you. All right. Committee members, any closing comments? I think it's been a continued great time of education here. A couple of themes that I think have come out from what I've noticed is, we do have some regulations that are holding, some of our communities down from affordable housing. And I think that term may have morphed a little bit over the last year. I think we may have used it in one way in the past, but I think it's kind of gone up into the next price bracket at this point. So I think we have some more work to do and look forward to continuing to serve on this committee. All right, we are adjourned.